Let's check out gold. All right, this is happening quicker than I thought. I was hoping to see this up here. This is happening where we just broke down. I'm going to use a continuation from this black tip. So SOS, then black tip, extremely overbought. Where we had support, now anticipated resistance. I want to see a little follow through there to get short, and if we do, we're likely to retest these lows. Okay, so here's gold. Short stops are moving in favor. This is the signal that I wanted to see. We got black tip, broke a little bit lower. Thought about it, now we're trading lower, and with this area here holding, we really should get down to this level here. If the bulls want to stop that, they better step on it in a hurry. Since coming back from my eye surgery, over about the last 6 weeks or so, I've had about a 36% equity curve growth. And that's even with yesterday thrown in the mix. So not changing anything, not going to do anything different. I'm still looking for the same stuff, and that's it. Another key driver is if you understand your markets, and I don't think a lot of people do, but for day trading, oil is a good day trade market. For starters, it's $1,000 per dollar move. So going from $52 to $53, one contract moves $1, that's $1,000 a gain. That means there's a lot of opportunity there. Also means you can book some losses too. But if you start to understand what your markets do and how they range and how much opportunity is there, and you also look at your model and how it works, then if you think about the big range, when we really get to big runs, if you can be a part of a couple of these big runs, I had one day where I was up $2,000 on oil. It's like an hour. And that helps that 36% growth curve. Yesterday I was in the red a little bit. That's the way it goes. I'm not changing anything that I do, and I understand that that can happen from time to time. I know why it happened, and I'm okay with it. But the traders that don't understand the inner workings of what they're doing, they don't get the range of their market, they don't really understand how they're making profits versus losses. Win percentage is probably given the wrong attention. I know that if I have a lower win percentage, that's fine, especially with the strategies that I use. If I was just doing a scalper strategy with like an 18 tick target, 15 tick stop, and I was at a 40%, I would be a bit concerned. But if I'm at a 2 lot and I've got a dynamic exit and I'm in anywhere from 45 to 55% win rate, I really don't care. I wouldn't use that as a data point to change what I was doing. I would, and I care more about the profit potential and the expectancy. All the great strategies longer term are going to trade in lower win percentage camp. It's almost impossible to see anything trading over 65 to 70% stay that way for long when you have big gain potential for dynamic exits. And that's something that I look for. So I know that oil does that. I know that oil at some point in the future is going to move and groove in a big way, and I'm going to be a part of it. So if I get a couple paper cuts here and there, fine. I'm going to be able to trump them in a big way at some point in the future, and then I'll lead into some more paper cuts, right? And then on and on. Which maybe we'll look at in training this Friday. Look at yesterday's price action. That's okay. That's one day's price performance, but it's something that you can work with. It's not really that relevant until you start to compare it to some other days. You come up with a filter based on yesterday's price action so you don't get into as much chop. That would be the next logical step, right, JB, is you want to figure out, hey, how do I limit some of those signals? Would that impact how you would have done a week prior where the directional movement was really clean? How would that affect you? That's what you want to see and differentiate. There's no way you can escape that. You want to be a chart-based trader, whether you're using stock indicators or you're using something proprietary. There's no way you can escape the fact that at some point your signals are going to look really pretty, and other times they're going to look really ugly. And we can't really control that. There's a couple warning signs that you can look for and some filters that you can put around price. But at some point, even with that, you have to let price work a bit to know that you're arriving at this place where things aren't so hot. So that's just the nature of the beast. But we'll look at some things on Friday to help manage that. And then we'll offset that with seeing how they impact more directional days. All right, got a good fade here in gold on that short. Look at the line that I dropped in and look at what happened with price. Okay, so I anticipated price moving up to where we had support, looking for resistance. I would have, if I had my choice, I would rather have seen it come up here, but this is what it did. I got the black tip here. I looked for strength of signal for price to break back below the DSR level. I got short, and then my auto program just took the stops out for me as we moved down, and all flat. Now this thing is trying to bounce back up. I am going to leave a resting sell order for gold at the DSR level here.